What's going on, everyone? So today I'm going to get into my 5 strictest trading rules, and these are my non-negotiables. There is absolutely no way that I can allow myself to deviate from these. And what I have found, based off of my metrics in times that I have gone red, is I have deviated from one of them, and it just is unacceptable. Number one, coming in at number one, if I do not prep in the pre-market, I do not trade that day. I know this is about to sound crazy, but if I do no pre-market preparation before the market opens and I come in late at like 6:40 for whatever reason, the likelihood I trade that day is going to be very unlikely for a couple of reasons. Number one is when you do your pre-market prep, the way that I teach it is that you do what is called a top-down analysis. So you look at your daily chart, you look at your month, you look at the week chart, and then you see where you're at based off of your levels. You look at your indicators, you look at there's news. There's a couple of different exercises that need to be done before you even taking a trade. And then right when I'm about to take a trade, I need to be able to answer 3 main things: my entry, where my stop loss, and where's my first PT. If I don't have an answer for all of those things and I don't have rationale before getting into the trade, I should not be taking that. And that all comes with the pre-market preparation or the pre-trade preparation, right? But there has to be prep before getting in. And the fact that I may wait, let's say I woke up late and it's now 7 o'clock, I may not take a trade because the move may have already happened that day and I may be late. So again, I like to get up early, I like to do my pre-market prep, and I have to have that done in order for me to feel good about the rest of the day. Okay, that's number one, non-negotiable. Number two is I do not adjust my stop to match my bias. So what I mean by this is oftentimes there may, especially when I was younger and first trading out and still within those 1 or 2 years. For those of you that don't know, I've been trading since 2009. I've been in the market since 2009. We're in 2024. This has been 15 years that I've been looking at screens. And I started actively day trading in 2016. So it's been quite a bit of time, right? And I've been able to amass a good amount of income from trading. And in the beginning, it was hit or miss, right? I didn't have that consistency. But what led to that inconsistency a lot of the times is I would have a bias going into the day. And I would say, hey, like I think today's going to be a call day. And then it starts going puts. And I keep saying, oh, it's going to go back up eventually. Oh, it's going to go back up here. Well, if it doesn't break this, then it's going to go back up. And I just keep deviating and deviating and deviating from where that stop should have been initially. And by the next thing you know it, instead of what should have been a 15% stop loss has now just turned into a 56% stop loss. And what should have been just $100 loss now just turned into a $500 loss, right? And it was totally avoidable if I just honored my stop. So rule number 2, and thing that I cannot let go, is that I have to honor my stop. Rule number 3 is I have to take profit when profit presents itself. And how I've been able to determine where I should take profit is I give myself zones of opportunity, is what I call them. So from initially getting in, my first PT, my first zone of opportunity that I'm looking for is somewhere between 10 to 25% to take a small amount of what I put in and cover some profit, trim, scale, what word you want to use. I use cover some profit at this certain PT. And then once I have done this, what this does for me mentally is that it alleviates a little bit of anxiety, right? Because I'm no longer holding on to the entire bag. I've realized some gain. And all the next becomes is capital preservation, preserving my capital so that in the event the remaining contracts comes back to my entry, I will get out those remaining, but I at least took a piece of the pie. I may not have got the whole pie on that trade, but I got a little bit. And to me, that is what starts to add up. But if I keep holding and I'm having that anxiety, it may lead to me making rash decisions that I don't want to do. And some of those rash decisions come from, and let me know if this is you, type it in the comments, right? How many times have you held the bag and you're up maybe a G or a little bit more, and then it starts to come back a little bit? Now you're back at maybe 400 and you're like, no, screw that, fuck that. I want it to be back to 1,000. And you keep holding on and holding on. Next thing you know, that 300 is back to zero. And you're like, well, I'm at where I started, so it's no harm, no foul. I'm just going to keep holding on. And then literally 2 seconds later, as soon as you said that, it just went now $500 loss. And then you keep hanging on, and now you just took $1,000 loss versus having taken that $1,000 gain, and then the revenge trading starts to come. So I'd rather take some profit, alleviate that temptation, and cover my ass, CYA, right? So that's rule number 3. Rule number 4, non-negotiable, is that I cannot exceed my max tolerance for the day. Meaning, let's just say you had a $100,000 trading account. The rule that I give my students is you should never exceed more than 5% of your total account per any one day. I have also rules per trade, but I'm just going to talk about your exceeding your max loss per day. So in this case, if you had a $100,000 trading account, your max loss per day would be $5,000. No matter how many trades I take, which I also have rules for that, no matter how many trades I take or how many losses I suffer, the total amount on the day should never exceed more than negative 5,000. Okay? So those are hard rules because in terms of trading, yes, we're playing the short-term game of trying to make a couple of percentage here or there throughout the day, but we're doing this for the longevity of time. Where people make the mistake is they trade with their whole account, fucking just go YOLO, and just end up losing 30% of their trading account in one day, and you're not going to last that long, right? So I want to be able to day trade for as long as possible, for years, and in order to do that, I have to mitigate my risk and my exposure per day, and that is staying within what we call our risk tolerance. Okay, so I can't break risk tolerance. Rule number 5, that is just, I can't ever break this, is I have to take mental breaks. Okay, if I have 2 losing days back to back, I take a mental 2 days off. If I have winning days, I even take days off. It is very important to get away from the screen. Number 1, if I'm winning all the time, sometimes many of you start to get ego, and then that ego leads to mistakes. If you're losing all the time, that leads to discouragement, and then that prevents you from even wanting to take a trade. So it's great to just step away from the computer, step away for a couple days, go do something completely non-related to trading. Go walk on the beach, go do whatever it is that brings you joy, right? And just take your mind completely off of trading, recenter, refocus, and then it just kind of humbles you and brings you back and you're more calm, right? So having that day off or 2 days off is very crucial to longevity and success. So those are my 5 very key rules that I just can't break, my non-negotiables. So let me know what your rules are. Type those in the comments below. If you guys enjoyed this video, let me know. Go follow us on Instagram at Stock Market Wolf. And if you guys want to join our program and come trade live with me and get our education, go to stockmarketwolf.com. As always, thank you for all of the love and support. I'll see you guys on the next video.